Hello and welcome back to Budgets and Beyond. In the financial world, diversification is an essential tool for savvy investors. Today, we're diving into the art of crafting a diversified investment portfolio from the ground up. Whether you're embarking on your investing journey or refining your approach, this guide is for you. First things first, what is diversification? In the world of investing, diversification is much like a safety net. It's all about spreading your investments across a variety of asset classes to lower your risk. Think of it as not putting all your eggs in one basket. By doing so, you're not relying on a single investment for your financial success. If one investment performs poorly, others may perform well, balancing things out. So, while the value of any particular investment might rise and fall, a diversified portfolio tends to smooth out those ups and downs. Diversification can help protect your portfolio from market volatility. Let's talk about asset classes. These are groups of similar types of investments and they form the building blocks of a portfolio. The most common asset classes are stocks, bonds, and cash. Stocks can provide growth, while bonds often offer stable income. Cash, meanwhile, is the safest option, though it typically yields the least returns over time. But the world of investing doesn't end there. You can also branch out into real estate, which can generate rental income and appreciate in value. Then there are commodities like gold, oil, or wheat, which can act as a hedge against inflation. Even cryptocurrencies like Bitcoin and Ethereum have emerged as a new, albeit volatile, asset class. Each of these asset classes behaves differently under various market conditions. For instance, when stocks are down, bonds might be up, and vice versa. This is where the magic of diversification comes in, helping to balance your portfolio's performance. Remember, it's not about picking the best asset class, but rather creating a mix that aligns with your investment goals and risk tolerance. Your next step? Assess your risk tolerance and investment goals. It's a pivotal part of your investment journey. Are you someone who thrives on high-stakes risks, or do you prefer to play it safe? Perhaps you're somewhere in the middle. Understanding your risk appetite is vital. Now let's talk about goals. Are you looking to fund a comfortable retirement decades from now, or do you want a down payment for a house in 5 years? Clearly defining your financial objectives is essential. These answers will shape how you distribute your investments across different asset classes. Now let's build that portfolio. Think of it as constructing your financial fortress. The foundation should be sturdy and reliable, typically composed of stable, low-risk investments. These might be bonds or index funds, which are known for their steady returns over time. Once your foundation is set, it's time to add layers. These are your growth assets. Stocks fall into this category as they have the potential for high returns, albeit with greater risk. But remember, risk is a part of the growth journey. Next, consider investments that provide steady income. Real estate, for instance, can offer consistent returns through rental income. It's like having tenants pay you a regular salary. Finally, to spice things up, sprinkle in some commodities or cryptocurrencies. These can act as your wild cards, offering diversification and a potential boost in returns. And voila! You're on your way to building a diversified portfolio. For example, mix in some stocks for growth, real estate for steady income, and perhaps a sprinkle of commodities or crypto for diversification. Once your portfolio is up and running, it's not set and forget. Think of it like a well-tuned orchestra. Each instrument, or in our case, asset class, plays its part. But occasionally, you may need to adjust some sections to keep the music harmonious. That's where rebalancing comes in. It's the process of realigning the weights of your portfolio's assets. It's about adjusting your holdings to maintain your desired level of risk and ensure your investment goals are always in sight. It's like fine-tuning your orchestra to ensure the best performance. Regular rebalancing is key, especially as market conditions change. And there you have it. We've journeyed through the fascinating realm of portfolio diversification, demystifying asset classes, unraveling the threads of risk tolerance, and painting a vivid picture of what it means to build and rebalance an investment portfolio. The road to financial health is paved with informed decisions and a keen understanding of market dynamics. Remember, investing isn't a one-time affair, it's a perpetual learning experience. So keep exploring, keep learning, and keep diversifying. You're now on your way to a balanced and healthier financial future. For more investment insights, don't forget to subscribe to Budgets and Beyond. Happy investing!